I think we're live again. Yeah, lol. So, okay, sorry, apologize for another inconvenience of network issue, but I'll continue from here. So, in this live stream, oh, I will be doing a live tip reading on Nasdaq or US 100 or whatever your broker named it, and it's the CFD version, not the future one. Okay, I don't know where to start because it's kind of already past on the start of the video because the first one got altered off another shitty internet connection. But first of all, I want to thank you all for the support. It's all been building my quality up on the trading side and the live stream side. Your feedbacks are golden for me. I mean, like, thanks for the support, and I will always try to improve. So here, let's jump to the chart. So why am I doing live tip reading? Because the checklist is not done yet on the backtesting. I'm still working on the previous results, and I'm still building a better plan for that, to reduce the losing trades and improve the win rates and stuff like that. And I will also share that in the future live stream. But for now, it's Tuesday, which means a really good day for trading. It's since the data is showing Monday, Tuesday, and Wednesday is the GOAT of the trading days throughout the week, while Thursday and Friday is kind of meh. Thank you very much, brother, and yeah, I hope you're doing good at your work. Don't get caught watching me, or unless you will be fired, I guess. All right. So, is the music still loud enough? If it is, I'll just reduce it and give a damn. So here, okay, let's do a higher time frame analytics here. Okay, what do we have? No, there. Okay, so looking from a 1 hour time frame, we are really sure that we are still on a consolidation here, which the price only going down, up, down, up, down, up. But it seems like the price is starting to create a shift towards the downside, if I'm looking at the chart, because we broke this structure, we shift from here, but I don't think it's like a valid one because it's just a swept, only a wipe and not closing, and then price comes back up. But I still be looking at the price coming down towards this discount array here, and if I'm looking at the range, maybe that's too far. So here, from the recent price action, we can mark that we are trading at this range. Okay, we are trading within this range because we took out this high. And we traded below this low. So this was the previous one, low, high. We traded through that, which mean we have a new trading range. Okay, so within the new trading range we can see that we are in a discount, first quadrant here of a discount, and this one is the extreme. And from here, if we look just like that at the beginning, after that dip to the discount area, we can see the price kind of going back up, rebalancing a fair value gap here, and then dropping lower. That happens during London, I think. No, this was London. So this to here, the drop was happening in London, and then during AM we started to do some consolidation and then continue to move. Okay, so that's for the M1 is still going, H1 is going to be a bearish bias for tonight's price action. Now let's zoom out to the 15-minute charts. The music is too loud for me, dude. Lol. Alright, now I know what you guys suffering from, commenting that the videos is not understandable because I can't hear you, bro. Alright, so here also looking at the 15-minute chart, we still have this high open. I'll mark it the AM buy side, and also we have this sell side open. I'll mark it AM sell side. Okay, I noticed something from this, if you guys also noticed it. So since the higher time frame, which is the 1 hour, is clearly trading bearish, and also the 15 minutes confirms it, creating lower high, lower low, lower high, lower low, lower high, lower low, and now we are in a complete bearish situation. So in this specific price action, what do you see? I mean, I'll pause for a second to let you answer it. But for me, I can see that the market is trading in a market maker sell model. Why? Because first, look to the left. We have here an original consolidation which happened here, right? That's the original consolidation, and then the sell model appears to be happening here, reversing here, back with the buy side delivery of the market maker buy model here, reaching the original consolidation. That purge of liquidity of this original consolidation happens at 9:30. That's too obvious, isn't it? That's just like so random. I mean, 9:30, exactly 9:30, burst to the original consolidation at the left. And then after that, since we've reached the original consolidation of the sell model, we then started shifting because we already fulfilled the objective, right? And we met with a premium PD array. Now we start to reverse right here in this area. Started to reverse. See this market structure shift, a retracement back here. I believe there is something on this area to be used as the sell entry. Okay, so then where's gonna be the target going to be in the sell side delivery here. Let's use this as the original consolidation. Wow. So that's going to be the target for this sell side delivery. It could go through it, or just reaching out for the discount PD array and then either reverse back or continue lower. It depends on how it's going to react there, and maybe there's another external factor of it. But for now, let's just focus on the sell side delivery here, because we already fulfilled this buy side delivery of the market maker buy model, and then now we are on a market maker sell model here with the sell side. Okay, I'll leave it here on the 15 minutes, and then let's drop down to the 1 minute chart. Okay, I will leave the price doing what it wants to do, but I will be doing a little bit of a review to the back of what was happening at 9:30 that we could have used as an entry of a trade if we see that on the 9:30. This one actually happening on, let's zoom in, boop, 30:31 burst, the original consolidation to the left here. Okay, so let's see what was happened during this price action and how can we anticipate this as a selling model. So first, this is going to be a little bit spill on the checklist that I'm going to share in the future video. So after we reach the original consolidation of the buy model, in this case it's this one, you can clearly see that this market was on consolidation, and then we target that, and after the price reached that, we zoom in and we track what's the market doing over there. Okay, here. So we started to seek for a market structure shift, right? So we see this one. See this high, low, high, and the intermediate low is going to be somewhere around there. No, that does not bridge the low, high. That one. Okay, so that is the external swing. My network just keep doing shitty things. Come on, just let me stream, let me educate my people, man. God damn it. Okay, sorry for that. Where was I? Here. Oh, where am I? Oh, sorry for that. Okay, here. Let's go back here. So we have an external swing, high, low, high, lower, low. We zoom in through this price action during the silver bullet, which happened at 10 to 11 New York local time. Okay, the silver bullet entry was bullish, if you can spot it somewhere around here, but I will not focus on the silver bullet right now, only to review the market maker model. Okay, right here it is. So from here we can clearly see the internal structure of this. So we have that high, we have this low, we have that lower high, and then we shift the structure over here we close below it. Market structure shift, and we did a failed higher high. So from here, what we can also mark is we will have a mitigation block where here the last downside candle of this swing low that got that made a lower high and then burst. Okay, drag it to the right, minus mitigation block. That should be minus bearish. You can save that. Okay, minus MB. You see that? Starting to nodding your head right now. Okay, now from this, exactly after you see this lower high, you can start to anticipate this mitigation block to be created. Let's say that we don't see that happen yet, right? So we only see this. We already form a lower high, and then boom, 1 minute, another minute, focus on the right, another minute, another minute, another minute, boom, we breach through that, and then we have the valid mitigation block and the market structure shift. Okay, now what we can anticipate from that move, after that move happen, we can anticipate to place an order where we can utilize this mitigation block, and we can also utilize a bearish FVG that happening during this market structure shift, which we have around this candle and this candle, yeah, that's the two that we have. We also have this volume imbalance right there. We have a volume imbalance. Do I have the template for that? No. I'll just mark it with this thing, just like that. We have volume imbalance over there. We have bearish FEGs. Okay, now after we see that formed, we can start to anticipate to put a sell order. Where is kind of relative, because it's going to be back to you. Either you want to do an aggressive approach or a conservative one. If I was approaching this trade with the aggressive one, I can simply put my limit order at the starting of this mitigation block, or maximum at this opening low of the bearish fair value gap. But if you are still conservative, in the conservative mode, or want to take it more precise, you can do on the upper level of this mitigation block, or even through this bearish FEG at the top, the first one. It's the extreme one. But which one is going to be mitigated by the candles? Let's see. Boom, boom, boom. Okay, so this FVG seems to be respected better than the upper one. The upper one was not even triggered. So this aggressive entry would have been triggered right here. The stop could be the end of the mitigation block, which just about to be tapped by this candle, but not. Or if you want to be safer with that, you can put it on this upper level of the bearish fair value gap, or even to the swing. It depends on you. Okay, So in this case, I will do this mitigation block level because I was entering based on that. But the perfect one was this burst FEG. If you're wondering why, this is the cause. So any PD array is going to be valid or even more stronger if they overlap with another one. Started thinking about that? What do I mean by that is, let's see this. This upper PD array is not overlapping with anything. Like it's just a standalone bearish FEG, a standalone volume imbalance. But this FEG is a strong supporting, a strong validator for this bearish mitigation block, which means this mitigation block is a strong level that the price going to be respect, especially when this other PD array that's inside of it getting reached. Look at how the price candle body is not closing above it, only 2 wick on the 50%. That's how strong a PD array inside of a PD array. Okay, so now you can think to take a future trade, so you will not be having a confusion about which one is it going to reach. Is it going to reach the lower FEG or the upper one? Oh, I'm scared to enter here because if I put it here and the stop loss is just so tight and the price is returning back to this fair value gap, I will be stopped. And I think from this you can start to eliminate those thoughts. Like you can be more confident to enter even at the lower price to sell or a higher price to buy because you have the confirmation, right? And you will be not ignoring, but more be like having a ball of steel to enter the market at a level that you were not able to do. But turns out that's the level it's that works. So you gotta change your mind to be able to do that. I was not able to do that because I don't know how to read the mitigation blocks. I don't know the confirmation about this and combining it with this. I will be waiting for that. Same as you. And the option is going to be not tapped out, not triggered, or being stopped because I was doing a FOMO. Okay, so that's another confirmation here on why this price action is not even tapping to this bearish FEG, but rather to respect this mitigation block and the bearish FEG. Okay, so that would have been the entry here. It's called a low risk sell. It's going to start from here, the low risk sell. Okay, because this is the beginning of the sell model. The beginning of the shift is here. So this is the low risk sell. Okay, but this one's what was sweet trade. Okay, but now what if you are late to enter the market? Say that you get a job or you were on the road or something that prevent you to look through your chart at the moment given, and say that you are entering after that trade happened. Now what you can do? For me, I will wait for the market maker model to end or reach its original consolidation. But if you want to develop that balls of steel, I would recommend you to do what the mentor did, ICT, which is going to enter the market at the second phase of either distribution or what's the other one, expansion. I don't remember about that, but what does that mean is, so this one was the low risk sell, right? So after that we can expect that the market's going to fill the original consolidation of the buy side delivery, which is this one that was from the 15 minutes candle earlier. Okay, so because that we have our running model at this period of time, we can expect that the price is going to dig down through that. What you can do is to find another good spot to either re-enter the market or follow the trend. How? That's going to be a little tricky question for me because I haven't done it yet. As I said before, I am a type of person that hate to follow the trend, but for the sake of the model I'll try to catch up with it, but I need to take a look at what was happened. Okay, so here, after the low risk sell, we can expect that we have another entry. I think it's possible with 2 or 3, I don't know, maybe 2 to either pyramid this entry or get the new one. Okay, so what's interest me was this move. So after that run happened, we start to consolidate a little bit and then drop another point, and then we retrace back here. That retracement is going to be my point of interest. Serious. After that the market drops again. What can you utilize this? As I drew previously on the 15 minutes, we have an external low here. Okay, so after this external low, we draw back into the range of this high right here and this low right here. We have another range. The price returned back there, and then we kind of giving a buyer a feeling that the market is going to shift up, so they'll buy, and then we have another sell side to be purged. So that's what the market wants you to feel like in this area. They want you to buy here because the market is going up, shifting this swing, and then they want you to buy here at the retracement. But what happened? It drops even lower. So what I would like to utilize this. So after this happened, we can look for another potential of the blocks or even OTE and stuff like that for the PD array. This was the swing that I talked about. Now let's zoom out to the 5 minutes. Do we have something here? That's the intermediate time frame shift. If I draw a Fibonacci here of the OTE entry, I believe that it's not going to be reached. Yep, it's far up there, so that's a no. And then we can utilize the 1 minute chart. Where is it? Where was it? Here. Okay, we can utilize this drop from this swing. So after that swing, we made a break of structure, which happened here, right? We did a break of structure, which means we still continuing the move, and from there we can enter a Fibonacci here with the OTE level. That what I will do if I watch this market real time live. Okay, and then you can set up another entry to be followed from this level. Stop will be at the end of this candle, and then TP can be 1 to 2. In this case, it's going to be right there. We got tapped in, boom, tap back again. We get stop? No. Do we get the profit? Yes. It's 60 point of run. See, that's interesting. I know. Okay, that would be the second entry that you can capture if you missed the first one. Okay, and now let's try to refine this entry on why is this price getting up here, or how can we catch that. I'm just going to do a disclaimer here. We don't try to catch the top or the low of the price. It's okay to have a drawdown like this, as long as the risk management is still solid. It's okay to have a drawdown like this, because that's why you put your stop loss in the take profit, right? If the stop loss is invalidated, I mean, you need to put the stop loss where it's supposed to be. You can't just put it so tight. Where? Here, the end of this, or even this. It could work at some points, but most of the times you need to let some room for the price to breathe. At this case, end of this OT is going to be it. So that's the entry. And now let's refine this entry. Okay, so we have the OTE, but let me delete that. So we have a clearer vision here on what was happening. So after the swing low, we created a higher high here, which took out this previous higher high. So we have a higher high, so we have a high, we have a low, we wipe the higher high, and then we wipe the swing. What does that mean? That means we have a breaker. Where? Here. Where is breaker? I don't have the minus BB. Okay, I'll edit it real quick. Pop, safe, minus BB. Interesting. Start to see the move. Okay, so here it gets interesting and interesting and interesting. Watch on how the body doesn't close above this level. Okay, it's only wicks and not closing above it. Still respected this breaker block. There's breaker block. So the refinement of the previous entry, which was the OTE, is this one, the breaker block. Okay, but it turns out it does not here. See that? Okay. But here, look at what happened here. So entering from a breaker block or another block that has a strong confirmation of another PD array being formed inside of it, like this bearish fair value gap, and even this one. Someone might call this something else, but I don't care. Okay, it's also respected here. At this point, that's where you can put such a small tight stop loss, but still it must make sense. Why do I mean by that? Is this one. So you try to catch this move of a price retracing back to the mitigation block. Okay, and since there we have another bearish fair value gap, so we put the entry here to catch the breaker retracement. The stop can be here, the end of this fair value gap candle, which is going to be this one up here, because this candle is the first candle, second candle, third candle. This one is fair value gap, and then the first candle is this one, and the high is this one. So we can put the stop loss here. You can put it here by the end by the end of the fair value gap, but it's still risky, even though it's not tapped. But it's safer to give the price again some room to breathe. So put it there. Target 1 to 2. Do we secure it? No, it's not. 1 to 2 is down here at this swing. Okay, like that. See, that would have been a break-even trade, since it is already 330 points here, and you set it to break even and hit the break even here. Okay, that still be the reason of why I'm not going to do a trend following kind of thing. But if I do it, that will be it, hit on the break even. But you know what, I see another thing here that even more precise. Let's delete that. So other than mitigation blocks, we have another 2 blocks, breaker block and order block. And what I'm seeing right here is a very precise entry of this one, specific to this one. Okay, what? This order block right here. Why is this called an order block? It's because we run through this old swing high of a liquidity of buy stops. We ran through it and then come back to the original move. So the last upside candles or consecutive upside close candles after this liquidity sweep is going to be the order block, this one. Now drag it, drag it, drag it, drag it. Make sense? It is makes sense. So then, in conclusion, we have 3 models of entry here. Let me redraw them back all. We have OTE, we have mitigation block, and we have order block. Okay, So all of this entry could have been a profitable one if the stop loss was placed at the level where it's supposed to be, which is this one, this internal swing. So that's the first entry, right? That's the OTE entry. OTE entry triggered here. That's the OTE entry. 1 to 2 is going to be down here. The second one is going to be the mitigation block entry, which is here. Same stop loss level. Same 1 to 2. That's wider. And the other one, the third one, is the order block entry. Here it is. One to two is not even so far away. It's only here. 15. But you could target this swing low because it's just too tight, you know. I know it seems kind of bullshitting right here because I already see the price action, but listen up. This is a thing that you can actually do on the live market condition, but with the requirement of a psychology stability. Like if you can endure such pressure of handling a drawdown or even a stop loss and still having a clear mind, putting your edge into these candles minute by minute, you will be able to do this. Now how would you do that on the live market condition? Is to have a clear checklist. You have to have it, because it's really easy to get lost if you don't have a checklist. Because let's say that you took a loss here, and then your mind will be like, oh my god, I'm on the drawdown or something like that, my profit was cut off, and you don't have a checklist. That model that you have in your mind is going to be distracted by that losing thing. But if you have the checklist, the clear one, you're going to be able to be easily track it. Let's say that you stop loss here, just delete that, reset it. Say that you don't even have that previous trade, and then you execute the new one with a better one, with a better positioning. Or even this one is was stopped, you continue to the next one, still with the same reset checklist. And then what happened? Two of those losses recovered, or even more, that we have profit far much from the losing one, the losing 2 or even 3, or how even much that was. Okay, so you just have to, so that's just the thing about trading. It's always going to be a psychological game of probabilities and stuff, people say. I agree with that. Okay, so that will be the area I'll be looking at if I was late for this move, but probably not, because this was my trading hour right there. But that's just for the explanation on the market maker model. It has like multiple entry timings. First one is going to be the low risk. You can find another one on the second phase, and the first phase and the second phase. But it might be tricky because you need to pair lot of stuff, and you can get drowned by it while doing it. Well, that's just because that's why this one called the low risk sell, because the move is going to happen and you will able to see it clearly, while not here it's a little bit harder to spot. because the trend already happened. Either you want to switch your bias or you are too FOMO to continue it, but yeah, that's up to you. I'm just going to explain on how this thing works. Okay, so that was our low risk sell model, which was happened there. Now let's see to the right. If we hold that first low risk sell model, which I'm not recommend, but in case that you close already like 80% or 50% of the profits here, and then you decide to break even the rest and hold it just to the top level of the original consolidation of the market maker buy model, you will bag 200 and almost 50 points on Nasdaq. Okay, isn't that good? I mean, that's great. But if that seems to be so unrealistic, let's go back to just aim for 1 to 2. That would have been an easy 2% trade. Or even you wanna target what? This thing right here seems so obvious also to me. This is a market maker buy model on the 1 minute. You can track it down to 15 minutes or of seconds or even 5 seconds. This is a original consolidation buy model, sell model. Target that, this, which is going to be close to this low, or even that. How many points? 85. Bro, that's so much. Okay, there. The trade was not even taking that long. Only 2 hours, and you bag such amount of points and profits. Okay, so that's for the current market condition that was passed. I mean, the start of the model that we are on right now. Now let's see what the market do here. Okay, here we are at 2254, and looking at the time, we have a macro that could run a reversal of this move. Started from 1045 to, I don't remember, to 11:15. Okay, so if the market starts shifting during this period, the price is going to rally up a bit, but after 12:15, which is this, the price going to continue the AM trend. In this case, the AM trend is clearly bearish. We'll retrace back, and then we could potentially reverse back following the original move. Okay, and we can also track that. If I can show you what I'm thinking about that move is going to be, it's going to be this one here, that area. What do we have there? We have PD array, of course. We have bearish FEG, lots of them here. This one was respected. Okay, but looking at the price action of this, we can have another PD array here. Okay, what do we have? We have swing high, we have swing low. Swing high taken, and then swing low also taken. Okay, Okay. What does that mean? That means we have a breaker block. Bearish breaker block. Okay. That will be another point of interest right there. That's the minus breaker block. It confirmed by this bearish FVG right here. There. Let's see to the left if we have another one. We have a balanced price range right here. There, overlapping with the bearish fair value gap. This is a bullish fair value gap. That overlapping level is going to be the balanced price range. Okay, we have already a strong level there. 3 confirmations. We also have this order block, bearish order block. There we have it. Okay, now look at that. That might be a strong level that the price is going to reach and then reverse back. Now let's bring back the OTE level. Notice on how the 62% align with those multiple levels that I mentioned before. So that could be a potentially good entry if the price decide to go back here, maybe play around and then continue the move to purge the AM session liquidity, which is the original consolidation of the previous buy side delivery. Okay, so if we hit this and we trade it down, we secured another hundreds of points in NQ. Okay, isn't that good? It is good, bro. I mean, stop line. Okay, so that's just a clear example of a market maker model. First one is a buy side delivery. This one is the buy side curve, buy side move, which called the market maker buy model. And then after it reached the level that it targets before, it retraced, shifted, and then run the sell delivery, the sell side model, the market maker sell model, this one. Okay, so that's just a very clear example here that is running on. I really love to learn and dig more into this specific model, because my friends are telling me that after you master how to spot the market maker, you can just learn a couple of other things and then you're set. I mean, come on, bro. So okay, so since that already explained here, I would like to do a little bit of promotion here. So if you head to the comment section, I will have a link to my Discord and also a link to a fresh trustworthy prop firm named Funded Peaks that you can use my link to register there, so I can have a little bit of affiliation bonus, so I can buy their challenge name. And you can also use that St. Patrick Day discount code SPDay1 that will grant you a 32.5% of a 5k to 25k account. It will end tomorrow by the upload of this video. It's going to be at 20th of March, I think. Yeah. But if you don't want to do that, it's completely fine. I don't force anyone to do anything. You can join the Discord channel using the link after the from that pick link. You can find a lot of educational PDF documents, thread there, text, people to chat with, just contact there, tag them on the general channel. They will explain tons of stuff for you right there. I mean, it's a free real estate. Okay. There's nothing paid, nothing, no subscription, whatever, VIP, mentorship. I give a shit. Okay, so you can join there to learn more about what I'm doing, to get the resources. If you have any questions, just drop them on the comment section and the Discord. And I think that's all for this session. And for this move, you can just watch it by yourself, because I don't know why. Because I mean, let's just hang out for a moment then to watch the price action here. Okay, I still have 1 more hour to do it, so let's do it together. All right. Okay, but this move can be securely locked after this tap into the original consolidation, and now say that we are risk free from any trades. Now we are looking for another possibility, which is going to be that level. Now let's watch this one. Okay, now here we are. Now let's watch this together. This is going to be a live tape reading. I know. And I wanna say again that I'm really thankful for the supports of the community, for the subscriptions and the likes and the watch hours. I mean, I'm really thankful for that. Why? Because for a couple of past months I've been offline, away from the YouTube live, and then the subscribers dropping and stuff. But then single or 2 videos of me live doing backtesting that just went through the algorithm and then attract subscribers, viewers out there, and I really appreciate that. But for disclaimer, I was not intended to grow my YouTube channel. That was only originated of me and as the archive for me if I wanna take a look back to it. But then you guys show up like out of nowhere, subscribing, commenting. I mean, like, thankful for the comments. They're all for me. It's just us wandering across the charts and nothing important to be talked about right now. It's just me going to rent. Okay, it's all good now again. And again, I'm really thankful for that. I will be open for the stats here if you want to see. So here it is, 41 in a couple of 28 days. The views 22.7k. That was like the most milestone that I achieved, and you can see also from the overview that just spiked like that. I really thank you for that. And this video is just like have the most views that I have right now, the first K views over YouTube, and I'm really thankful for that. And with that, I will keep digging into the model so I can explain it better for you guys and actually make myself profitable and also help you getting profitable with this model. I know that will be a long journey, long as learning process, but in the end it will just pay off in one single click. Okay, so yeah, if you don't know what to do right now, just click that link, motherfucker, on the description below, or you can also find it on my channel description. It's this link for the funded pick discount and this link for my Discord channel. Okay, now let's watch on what's the price going to do, and I will be idling the live stream, so I will leave a note here so people that coming here and not hearing me talking know what happened. But now I don't know where that thing is. Comment, call out. Okay, here, back to the old style. Waiting for the price to reach this level to anticipate sell position. Okay, and then targeting this sell side. Okay, so that's the thing. Now let's just wait. I will also put an alert here so I can hear what will be happening in the background. NQ crossing, so anticipation level. Alright, and I will also put that here. Let's do an aggressive approach. The stop will be, I'll put it above this swing and then target this sell side, but there will be also this one. And also, once you see what's happening with the market model, you cannot unsee it, because what I'm seeing here is we run from this original consolidation, we run up, we run down, we run down, we run up through this original consolidation. In the short term, this will be it. Original, sell side delivery, reversal, upside delivery, original. Or even further, maybe this happened on the 5 minutes. Original, sell side delivery, reversal, buy side delivery to the original. So this is going to be repeating all over again, but it's not going to be symmetrical, but you will understand about it once you can see it. So study harder. Okay, now I will leave the thing here. Okay, I will mute the mic and see you after the alert triggered. Have fun. Okay, I just got back from another room and thinking about another plan of continuing my checklist to be able to be shared quicker. Fuck. Okay. So I will leave this level here, and you can watch this on your chart. Draw it. If that happen, it's gonna happen. If it's not, then just skip it. Okay. And then I will be doing a live streaming soon. I can't promise you when, but I will start to catch up with those uh, plan that I'm going to share with you guys. And until that time come, I hope you have very good trading days and be safe out there. Okay, thanks for hanging around. Peace.